Good afternoon, everyone. I welcome you all to our today's important webinar on export finance, especially pre-shipment and post-shipment credits. So this is a very, very important topic as far as exports are concerned. Getting an export order is one step, but then to execute it with a proper finance and managing your collateral or your finances is more important. To know more about this, we have scheduled this important webinar with our faculty, Mr. Gaurang ji, who is my good friend. Today he is going to cover some of the pointers like exports and export finance from bank perspective, guidelines and processes of pre-shipment and post-shipment, then management of credit risk in exports, costing of export finance and other sources to raise export finance. We will conclude this session with question and answer. I request all of you to please put your questions in chat box. We will take some of the questions online. You can unmute yourself and then you can talk. Before we begin, let me just introduce Gaurang ji shortly. Gaurang ji is Mr. Gaurang is the during this. He is an ex-banker with over 35 years of rich experience in international trade, finance, and foreign exchange. During his distinguished banking career, he held several positions, including chief dealer, forex, and head of international division at Bank of Rajasthan. Also served as he was also working with ICICI Bank at various roles, including branch head, compliance manager, and subject matter expert in trade. Currently, he is actively involved in training and advising corporates on trade, forex, FEMA, and RBI related matters, and is also associated with institutions like IIBF and FIDI as a resource person and a faculty. He is also one of the faculty for our ACPIT course, which will start from tomorrow. So, without wasting time, I request Gaurang ji to take over the session. Gaurang ji, over to you. Thank you.
Thank you, sir. Thank you, TEXPROCIL, and thank you, ICCI, for this opportunity. Thank you, Wale, sir, for the introduction. And very rightly said that an important topic of finance, and that too in exports, we are going to cover this today's session. So as already requested, please keep posting your queries in the chat box. I will take all the queries towards the end of the session and also by raise of hands. So here I'll just start my presentation and from there. Is it visible, sir?
Yes. It is just appearing. Yeah, it's visible.
To export finance, pre and post shipment credit, what are the guidelines and facilities that we are going to see? Now, yes, this is an agenda. So let us start with what is exports. We need to understand what is treated as exports in the relevant guidelines and why export finance and how export finance is to be seen in a different manner. It is not the normal finance which we are taking in our cash credit or overdraft accounts for our normal business functions, but it's slightly different than what we are doing in a normal business. So export finance is what it is defined under FEMA. FEMA 99 is our umbrella act. As far as exports is concerned, we have got Customs Act, DGFT related guidelines, foreign trade policy, etc. But when it comes to the payment, because if I export, I have to bring in the payment, FEMA comes into picture. And it is defined as whatever you are sending out of India, any taking out of India, any goods or provision of services from India to any person outside India should constitute export. Now, I will pause, which is not given here. I extend this definition to mean that wherever you have a commercial value, if I send mangoes to my brother as gift, it is not an export, it is a gift. Gift, export, but gift. But if I tag it that I will charge $100 for it, then it is an export. So wherever you are putting a commercial invoice, wherever the intention is that the money has to come. Now, whether you call it commercial or non-commercial does not matter. But the intention is that you have declared that or you should have intended to declare that it is an export, it is tagged with a commercial value, then it is an export. Now, wherever we are doing export, what we are actually doing? The goods produced in India or the services produced in India are the wealth of the country. The owner is not me, you, I, X company, Y company, Z company. It is the part of the country's GDP. So when it means that if you are using it here, country does not matter whether it is paid or not paid. But when it is exported out of India, because it is a product of India which is being sold outside India, it has to be paid through inward remittance. So whatever goods and services are supplied out of India, it must be paid through inward remittance. Now, paid does not only means paid, because it is our business. Business may be paid sometimes, business may be paid sometimes, I have to offer discount, or all other manners are there. So the larger meaning of it, paid means that it should be accounted for. So why this definition is necessary here? This definition is necessary here because if I take export finance, if I do export, if I declare it as an export, and if I take export finance, I must get it paid. If that bill which on which I have taken an export finance not paid, then it will be a heavy price for the exporter. Price is what? For a finance, the price is the interest cost, the cost for it. Because I am intending to take some finance where I am intending that I will export or I have already exported, it must be paid. If it is not paid in the manner prescribed, then there is a price changes. It is not tagged as export. So that is the link here which I wanted to draw. Now, exports is here. I will have a buyer, I will have an order, I will have a shipment, I will have a payment. In this cycle, there will be a lot of ifs and buts, but I need finance here between the order and the shipment to manufacture, procure, all those things, processing. And I will also require finance here. When I do the shipment, the payment is not immediate. The payment is a time lag. So I will have to bridge that time lag. That working capital gap in the shipment and payment is also required. So here there are two legs of export finance. Now, all this while, export finance there was a separate circular by Reserve Bank of India, Master Circular on foreign rupee and foreign currency export credit and customer service. It was 1st July 2015. Lot of the items related to banking on this particular aspect were handed over to the bank. We were free to do it, but the larger framework was there. Now, last year in November, RBI has consolidated credit facilities guidelines, and this 2015 circular has been dispensed with. Now, the new guidelines are all covered in this November 25 guidelines. So, whatever guidelines are there, we will be almost common there from that when we try to understand in that. So, export finance is what? Finance allowed for promoting export. The first intention of tagging this as an export finance. Finance to sab jagah finance hai. You could have talked about finance only. Why do we call it SME finance or we call it agri finance? Because we want to promote that particular aspect. We have this agri finance, we have an SME finance, we have a term loans, all those things are there, but we want to promote export finance, so there's a separate tag export finance, and that is the reason why RBI brought this concept sometime in around 65, 67 or so to promote export as a separate topic under finance. It is allowed to DTA units, SEZ units, and deemed exports. Now we have got various SEZ. SEEPS is one SEZ, Falta is one SEZ, Jaipur we have got 2-3 SEZs, Mahindra SEZ is there, Chennai SEZ is there, all those SEZ, Bharuch is there. So different SEZs are there. And the non-SEZ area is a DTA. So whether you are exporting from SEZ or whether you are exporting from DTA, both are allowed to have export finance under this window. Also, interstate SEZ exporting to DTA or DTA exporting to SEZ is also allowed to have finance. And the deemed export, where the goods are not going out. It is being supplied within the country, but payment is coming from abroad, or it is within the definition of deemed exports. DGFT is separately prescribed, RBI is also separate. So, finance, wherever you are earning dollars, I will simply put it. wherever you are earning dollars or promoting goods, selling goods outside India. Earning dollars does not mean only that it should be billed in dollar. It can be in INR also, which is a convertible route. Then I will require finance for procuring, processing, manufacturing, and packing of goods. And I will also require finance to bridge the gap of export receivable from the time of shipment to payment by the buyer. So necessarily, export finance is a two-level finance. One we call pre-shipment or a packing credit. The name itself is pre-shipment, shipment se pehle, or financing the purchase, processing, manufacturing, or packing. What is there before shipment? I will pack the goods and keep it ready. So it is whatever is there, packing of goods prior to shipment. If it is services, then maybe the working capital. Now I have packed it. What I'll do? I have to ship it. So any loan or any advance which is granted after shipment of goods. So packing, then shipment done. When I do a shipment, I will get the documents. What documents? Shipping bill, BL, invoice, etc. So based on those documents, if I am taking a loan or a credit facility, it is post-shipment. The name itself is pre-shipment and post-shipment. After shipment. Now this is different. It is not in our manufacturing activity. If I do domestic sales, does anybody say for what you are taking money? Nobody asks. If I write a check on my cash credit account, or if I do an RTGS from my what you call overdraft account, nobody asks. But here somebody will ask. So it is different. So here I do not have that cash credit type of RTGS or checkbook facility. I will have to touch base upon the bank every time. I have a limit of 5 crores. I will have a limit of 5 crores for CC. I will be able to draw CC. Checkbook de diya, I will draw a check and withdraw the money. Or I can transfer through RTGS that money to my supplier or for any other procurement of machinery, etc. But even if I have a 5 crore rupees pre-shipment, post-shipment finance, it is only the limit. I only have a piece of paper, limit sanction ho gaya. When I want to withdraw that money, I don't have a check. So I have to go to the bank and say, or approach the bank. Go means, anyhow, now maybe several of the banks are giving the facility for drawing money online. Online means it is not RTGS, but you have to submit the request online. So I have to submit a request, sir, I have received an order, or I have made a shipment, I want money for procurement of raw material, etc. So it is different from our normal. Now, what different it is that we are going to see in this next 40 minutes, 45 minutes. So as we said, there are two types. One is pre-shipment and one is post-shipment. Pre-shipment is what? When the goods are in India, the money is given to the exporter or various activities related to export. But the goods are not shipped. It is within the country. It is pre-shipment. And when the goods have already said, shipping company ko de diya, BL hai, then the nature or the handling of the document or handling of the finance is very different. The risk is different in both things. Or hence, the different parameters or different aspects should be understood. So first, we will see pre-shipment credit guidelines and laws. Now, pre-shipment is somewhere called export packing credit (EPC). Somewhere it is called packing credit loan. And when you draw it under dollar route or a foreign currency route, it is called pre-shipment credit in foreign currency. Almost same game, but the name nomenclature are different depending on the bank, how they are using the nomenclature, and whether you are drawing in rupee currency or you are drawing in a foreign currency. PCFC and packing. It is a working capital facility. Now, working capital facility can be fund-based and non-fund based. But people tell me, sir, ye kahan se laye? I will have your supplier of raw material. He says you send me advance. I will give you goods in 45 days. What you will do? You will draw the money. You draw the money from the bank and pay to your supplier. In 45 days, you are getting the goods. What you are ultimately losing? You are losing the interest for 45 days. You want to import raw material. I have two manners. I import raw material, I send advance payment, or I can open an LC. LC is as good as an advance payment. So what I do, I open an LC where the shipment is done at 45 days. But the supplier says, okay, if you open an LC, I will give you credit for further 45 days. I will ship the goods, but I will get the money, or I should get the money in 45 days after the date of shipment. So कितना हो गया? 45 plus 45, 90. For 90 days, I am not paying interest because I have not paid money upfront. I am only paying the commission on LC. Commission on LC is what? 2% employees. If my all expense on the LC related transactions is 2 or 3%, I am not paying that 8, 9, 10% of interest which I will pay under the fund based assessment. So wherever it is possible for you to make your supplier of raw material agree on an LC terms, you will have to get this fund based and non fund based created within your limit segment. You have a 5 crore limit, but you can tell bank, sir, if in 5 crore you are giving me 2 crores of packing credit, within that 2 crore you allow me 1 crore of LC or SBLC limit, both import LC and domestic LC. कभी आपका डोमेस्टिक रॉ मटेरियल सस्ता है, कभी आपका इंपोर्ट रॉ मटेरियल सस्ता है. So you may sometimes buy from abroad, sometimes buy from home. So compare cost between fund-based and non-fund-based every time you are drawing. If the tenor of LC is short, then maybe the cost per percentage per annum will increase. On the other end, whenever you are drawing fund-based, and if you are in that list of HS codes approved for interest subvention, maybe your cost is coming down. So you'll have to compare both and then see which is more workable or which is more beneficial to the export. Now, the other aspect is that I have a limit, but how do I draw? So every time I want to draw, I will have to go to the bank and say, sir, I have got an order. Give me 10 lakh rupees. What order or an LC? I want to procure raw material. Out of that 5 crore, give me 50 lakhs. I will have to procure this 1 crore order is there. So within 5 crore, every time I draw, the bank will create a separate notional account. And each will be monitored for a different due date. I get a first order. In this first order, my shipment date is 31st of July. So the document submission date will come to maybe around 21st of August. So my due date becomes 21st of August. Tomorrow I get another order where the shipment date is 30th September. So the date will come sometime in October. So each will have a different due date. Within 5 crore limit, 5 crore has one due date, 1 year. Tenor is there. It is not going to lapse. But this will incur me overdue interest subsequently the due date. And that is why this is being monitored through a separate notional account for each drawing. Also, the drawings are allowed only on FOB basis. On pre-shipment side, the bank does not finance freight and insurance. So what do I do if I get a FOB order? So if I get an FOB order, suppose if I get a CIF order, that is valuing $100, notionally, indicatively, this is just for an example, because maybe if there is a Hormuz type or Red Sea type of issues are there in the around the world, or some war is there, then the freight may not be 10%, and the insurance may also not be around 2-3%. The freight could be 20%, 25%, the insurance could be 5%. So this is just an example. So bank will reduce the notional freight and insurance and arrive at a net FOB value. Out of this FOB value, whatever the margin has been prescribed by the bank, that margin bank will deduct and give. Suppose the margin is 20%, bank has said you should bring your money. So what will be there? 87.5 minus 20% is 17.5. So bank ideally for $100 order, you will get $70 of funding or equivalent. So that is why always keep a margin. Don't think that I will get 100% or 90% of the value. No, freight and insurance not covered in pre-shipment. Period of advance. Now, period of advance is something where always there is a dispute with the bank. I want the money for a longer duration. But the bank says, sir, whatever you are manufacturing, it is maybe that manufacturing cycle itself is 60 days. Why do you want pre-shipment for 180 days? So there always will be dispute. So keeping some leverage here or there, an average working capital, average cycle could be 90 days or 120. As long as there is a requirement, I should store the raw material for a longer period. Because if I'm importing, it takes 60 days or 45 days to arrive after payment, etc. The period should be around 90 days, 120 days. But normally banks will not allow more than 180 days. Where it will be required if it's a made to order very specific machineries, etc. But we are largely not in that trade. So that will be a different ball. So based on the business cycle, and it will depend on the individual business. So for a trader, somebody who is doing trading, chemical यहाँ से लिया वहाँ भेज दिया. I will get an order. I am only a marketing man. Do I need 180 days packing credit? Maybe no. Maybe I am getting advance from the buyer. Then no. Maybe my supplier has agreed to give me a credit for 90 days. Then also no. Maybe reasonably 30 days, 60 days. So it will all depend on the nature on the what I discuss with my banker, how it is to be handled. And maximum period allowed ideally is 360 days from the date of advance. Now, why 440 days is there? This is somewhere in the last slide. But very recently, in under the trade relief measures, RBI allows sometime in the month of November that for advances which are taken up to 31st March 26, we could allow the period of 450 days. So if you have taken any advance sometime in the month of January, February, that is extendable up to 450 days. Now everything is maybe seemingly coming in the place. So this 450 days for new advances is not. Your business cycle is 90 days, then bank has granted you 90 days credit. So what does it mean? That if I get an order for 90 days, bank will allow me 90 days. But after 90 days, it will become overdue. And that overdue will cost me additional. Suppose I am drawing at 10% today. After 90 days, that is 91st day, the interest rate will not be 10%, it will be 12%, 13%, 14%, depending on how it is. I have taken this pre-shipment advance for exports. So what I am going to do? Manufacture the goods and then ship it. Manufacture the goods, then ship it because I have to complete the order also. So ideally, pre-shipment finance is to be liquidated when I submit the bill to the bank. Maybe my shipment date is 30th September. I will ship it around 24, 25 September and then submit the bill to the bank around 30th September or 4th of October. So ideally, when the bank handles that bill and does a post-shipment finance by handling the bill on collection or purchase or discount or negotiation, whatever the manner, we will see what all these terms are. Then in that case, this we have to take an advance against that bill and adjust the pre-shipment. Or alternatively, suppose my order is there, but because of some manufacturing process related or port strike, etc., I am not able, or container is not available, that particular place ship is not available, costs are too high, I am not able to do the shipment. So if I receive any other payment from abroad, any other advance payment or any other collection bill where no advance was taken, that can also be utilized. Negotiation is when the bill is under LC. So we use the term negotiation. When it is a side bill without LC, we use the word purchase of bill. And when it is a tenure-based usance bill, we use the word discount. Now, if we have a maximum period, 360 days or 450 days, whatever is the period according. If the packing credit is not adjusted in 360 days ideally, the tag of export credit is withdrawn. What does it say? It ceases to qualify as export. Ceases means I will not call this an export credit now. So what does it mean? If I do not call it an export credit, then from day one, any benefits of credit, concessional interest rate are reversed ab initio. I will withdraw this tag of export credit. So from day one year back, I had taken advance. From that period, suppose today is what? 25th of June. So if I had taken some advance on say 30th June last year or maybe 4th July last year, it will be around 360 days now. So 4th July 2025 onwards, that will be treated as a normal advance. Now normal advance means that I have to pay different interest rate. What different interest rate? That it is not an export credit, so it will be treated equivalent to cash credit. Then it has become overdue, so bank may charge you 2% extra. Then it is maybe default, then bank may charge 4%. And if there is an interest subvention, maybe in between I had started drawing 2.75%, that will also be taken back. So normal rate suppose is 9.25 and my CC rate is 11.25. So bank will apply 11.25 first from that 4th of July. Then overdue interest and penalty or default of 4%. So my interest rate goes to 17.5. And if I was drawing, suppose 2 or 3% of subvention, then my cost was 9.25 minus 2.75. So from 6.50 or so, I am paying 17% interest. So my cost of finance will increase drastically. There is a running account facility. What does the guideline say? Can be extended only to exporters whose track record is good. What do you mean by track record good? Track record good means that banks will see that there is no default, you have been doing businesses for last 4 or 5 years, and you know your business. You know how paper documents are to be submitted, and regularity is there. Or there is a UU or United Free Trade Zone, SEZ, GPZ. To run the business regularly, bank can allow you pre-shipment finance without lodgement of order LC. Still, checkbook is not there without lodgement of order LC. So when you say without lodgement of order LC means I can only give a request to the bank, sir, I am expecting an order for $1 lakh and I need money. My limit is there. You give me 20 lakhs today or 10 lakhs today. That is possible. Copy of an order on LC to be submitted at a later date, but I still have to comply with those guidelines. What? Reasonably 30 days from the date of advance. So if I take today, within 30 days, I should submit the copy. Sometimes it happens. The negotiations are going on with the buyer for some small minor amount. Everything is decided. एक छोटा सा आइटम है, शिपमेंट 30 तारीख को करना है या 1 तारीख को करना है, ऑर्डर 5 दिन नहीं आता. Practically this happens. Or very good or very practical advance. Somebody gave an order on phone without writing a mail on 24th of December. And he said, sir, tomorrow I am going on leave for 7 days. I will be back on 3rd of January only. You start production. Abhi paisa kidhar hai? There is a gap. He has already proceeded on leave. He says, I am giving you an order. You start production. But I will give you in writing only when I come back to my office. No order, but I can get the money if I have a running account. So those who are already in the business for last couple of years, they should ask the bank. If you do not have this running account, you can ask the bank, sir, allow running account facility. There may be sometimes gap, but you will have to keep this in mind that you have to submit the order immediately when you get it. So 30 days is the reasonable. And if you already have an order, don't take running account. Let it be running account, दूसरे दिन order दे दो, flexibility के लिए. This is to be adjusted on FIFO basis. This because either you have an order to order adjustment, एक order का you have taken packing credit, then you have done the shipment, it gets adjusted. But suppose there is no order on day one, then it is adjusted on FIFO. It is not allowed to sub-supplier. We will see what sub-supplier. Now there are two types of exporters. One is a merchant exporter and another is a manufacturer. So those merchant exporters who are not actually manufacturing themselves are procuring from somebody. So those somebody who is manufacturing for them, there are a lot many people in the country or in the world who do not want to go into the hassles of exports. अरे ये कौन करेगा? I will manufacture and I am ready to give to somebody. Let him export, but I will not do the export. Those people they are also contributing to the economy, export economy. So what we have categorized is one is an export order holder, that merchant trader, merchant exporter, and another is the supplier. We call it sub-supplier. So the guidelines say that sub-suppliers should also be benefited out of all these schemes relating to export finance. Whoever is supplying either raw material, finished goods, whatever. So ideally, when both come together, the export order holder will give a declaration or disclaimer in favor of the sub-supplier that I have not taken packing credit against this. So sub-supplier's banker can give the packing credit. Or if I have an LC, so I can declare that under this LC I am procuring the goods. What is the benefit here? If the sub-supplier is drawing cash credit at 11.25%, and because of my documentary support to the sub-supplier or maybe talking to his bank also, the sub-supplier is able to get export finance at 9.25%. And maybe subvention also, 2.75%. Same commodity, HS code hai. And I have reduced the cost to sub-supplier around 2%, 3%, 4%. When his cost goes down, can I not negotiate? Now you give me 1 rupee, one rupee per kg cheap because I have saved your cost. It is beneficial for the merchant trader also. It is not only for sub-supplier. So I have to see it in this time. Then another is deemed export, where the goods do not leave the country. And payment is either received in foreign exchange or convertible. An exporter, a manufacturer supplying to an SEZ unit. Onshore goods are same. Then SEZ will supply. Somebody is supplying to an importer who has got an advance authorization. He has got that advance authorization cancelled in his favor. What you are helping, this supplier is helping save the foreign exchange. So wherever you are, or maybe a World Bank project going on, or say there is some global tender, we are having this bullet train between Ahmedabad and Mumbai, which is being funded by various sources. And there is a world global tender for supply of, say, certain steel items or bogies or rails or etc., electrical products. And Siemens India and Siemens Germany both have bid there. Now, if Siemens Germany is supplying that item, then Siemens Germany will get the foreign exchange. So, foreign exchange which was to come to India from Japan will go to Germany. If Siemens India is supplying that from Chennai plant to maybe Surat or BKC, then what will happen? The goods are within India, but money is coming from Japan for payment. I am saving that foreign exchange for the country. So Siemens India will supply to the rail project will be deemed export. Here also the benefit of concessional interest rate and other guidelines can be. Now, when I draw packing credit, I can take it with a base of rupee interest rate or with a base of foreign exchange. So when I take it as a rupee, we call it packing credit loan or pre-shipment finance, EPC, export packing credit. But when I take it as a foreign currency interest rate base, we call it pre-shipment credit foreign currency. So my benchmark rate changes. In India, my benchmark rate will be repo rate or treasury bill rate, etc. For foreign currency borrowing, my rate could be alternate reference rate or SOFR nowadays, secured overnight financing rate. And I can draw in any currency. I have an order in dollar, I can draw in euro because my import is in euro. Here also that maximum period is 360 days. FOB value will be considered, but some commodities like agri commodities, I may require more money. So order value FOB, beyond that, rupee finance. Difference in benchmark rate in exchange risk. Now, when I draw in dollar, the bank is creating a liability in dollars only. So bank is taking an additional risk, which is exchange. And benchmark is different. Interest of repo rate, I am taking SOFR. So benchmark movement may be different. Sometimes repo rate movement may not be there and SOFR may move. Sometimes SOFR may not move and repo rate may be reduced or increased. When I am drawing foreign currency, if I have an imported input, suppose I have to draw some raw material, then that foreign currency used outrightly to send directly to the supplier, maybe in Germany or UK, etc. So directly can be remitted for payment of import related bills or advance payment against import. But if I do not have any imported input and my all inputs are domestic only, then bank will convert it at today's rate and give it. Now by converting it to today's rate, what is happening? Your exchange risk is gone. You know today that your dollar rupee is converted at say 94.50. You have received 94.50. Now you have to give the dollars to the bank. Abhi 96 ho jaye ya 92 ho jaye, you are not bothered. This loan cannot be credited to EFC account. This is why I have put it here, because a lot of exporters come and see. Even bankers sometimes say, "Mera customer मांग रहा है." भाई मांग रहा नहीं. It cannot be. It is a loan. It has to be used, either converted or you remit it for import, but cannot be credited. Same way, the liquidation will happen by bill purchase, bill discount, bill negotiated. Now, if you have certain balances in EFC account, for last 4 days you received some credit, but now that shipment is not happening, so you can draw it from your EFC account and adjust, subject to mutual agreement with the bank. Now we say that bank has taken an exchange risk by giving you loan in foreign currency. Aapki balance sheet is rupee, bank's balance sheet is in rupee, but when you take a loan in foreign exchange, you have to pay foreign currency. Now foreign currency you have seen 92 to 94, 94 to 96, 96 ke upar. Then it has started coming down, 94, 95 and 94.50. Tomorrow it may become 93. Again, it may go to 95. That risk is there, up and down. So, ideally, it should be paid in due date. So, bank is not bothered, because due date, they will have to wait. But beyond due date also, they will wait till 30 days. Beyond due date, 30 days. So, overdue 30 days also they will wait. Suppose it is not paid by that day, then bank will not wait. They need to de-link the credit risk and foreign currency. What is de-link we call? Crystallization. Crystallization is done at TT selling rate. So bank will notionally sell the dollar to you and recover that dollar component. And if there is an exchange difference, that will be adjusted. Now, this crystallization will always add to your cost. First, I took the loan, $10,000. Bank has converted that dollar at earlier 94, 6 months back. Today, I will crystallize it, or maybe last month I have crystallized it at 95 rupees. There was a difference of 2 rupees or 1 rupee. That bank I had to give to the bank. Now, every time bank is selling dollar or buying dollar, bank will take 10, 20 paisa. That is also a cost. And unfortunately, I received the payment for that exporter. I am doing the shipment now. When the rupee goes to 93.50 again, then again there is a difference of 1. So that every time maybe that inflow, outflow of currency or purchase, sale of currency, there it will add to my cost. Crystallization risk comes back to the exporters, and cost is increased because of multiple margins. So this is all on pre-shipment. I will move to post-shipment now. Foreign bill purchase, foreign bill discounted, foreign nuisance bill discounted, foreign bill negotiated, and post-shipment export finance in rupee. This nomenclature of FBP, FUB may be different in different banks. Some say export bill purchase, EBP, some say XBP. So different nomenclatures. Post-shipment is what? Loan or advance after shipment of goods. So necessarily I have to produce the document, BL, shipping bill in our case, and commercial invoice. 3 important documents. Maybe bill of exchange hai, nahi hai, insurance hai, nahi hai. All are supporting documents based on the Incoterms used or the conditions required, etc. or your commodity specific certifications. But basically, I will require all these 3 documents to take an export finance. When I take an export finance from the bank, it is called as self-liquidating. But ultimately, the buyer will pay and then this will get adjusted. So we call it self-liquidating. It could be the rupee benchmark rate or a foreign currency benchmark. Similar to pre-shipment finance, rupee benchmark rate or foreign currency benchmark. So again, here there will be a tenure link. So tenure means what? How many days of bill will be there with the maximum bank will discount. So bank may say, I will discount only those bills which are 90 days, not beyond that. Or I will do the discounting of up to 180 days. And then on that, bank will prescribe a margin. So bank will say, on the bill value, I will not finance your profit. So I will give you only 90% of the money, or I will give you only 80% of the money, because bank knows what is the profit margin, because they will study the balance sheet and then only give you the limits. Now, whenever bill is purchased, discounted or negotiated, bank will apply the foreign currency rate. When the bank applies the foreign currency rate, so that rate is applied today, whereas the money will come after 90 days. So today, bank will apply 90 days rate. So you have to see whether in site what rate is being there, but in the usage, then your premium is appropriately added to that rate of interest up to the due date. I'll have to calculate the due date for the bill. Suppose today I have a bill which is a 90 days usage bill, and today only the shipment is. I'll have to count 90 days from today. So 90 days financing bank is giving me at a regular interest rate. So bank will recover this 90 days interest upfront from the amount which they are financing. Liquidation of advance, ideally from the same bill proceeds. I have discounted a bill. When that bill is paid, the advance is liquid. Now, one more ideal condition or one more ideal facility is there for the export. What happens that when the bill is paid say on 1st of January in USA. On 1st of January, the bank gets this credit. They will get this intimation on 2nd of January. 2nd of January, this statement came into Bombay Treasury. And then suppose this is somewhere in Morbi or somewhere in Bharuch, your exporter is there. What will happen? Bombay will inform Bharuch branch. Bharuch branch, this customer is another remote branch. They will again inform them, your $10,000 have come. The bill number is given, out of which we have already financed $8,000. You have to tell us what to be done with $2,000. Sometimes we will convert, sometimes we put in EFC, sometimes you have to adjust in packing credit, etc. The customer gives the information on 4th of January or 5th of January, then the information goes back. And when you convert or when you actually do the accounting or when the bank does an actual accounting entry, it is 7th of January. When the bank does the accounting entry on 7th of January, up to what date the bank should charge interest? Interest on what? The advance component of 8,000. So this rule says that on the value date is 1st of January, bank should not charge interest beyond value date because it's that same day conversion or same day reversal of entry or accounting entry does not happen. Many of our exporter friends sometimes do not know this. We have talked to several people, we have seen their documents, advices that we have found. You will have find gap somewhere here or there. It is very small. But around the year, if you are saving 5-7 days of interest on your advance, you see at the end of the year what is the total saving. So as I spoke earlier, FBP is for side bills, FUBD is discounted bills, which has got a tenure of 30 days, 60 days, 90 days, 180 days. But when this bill is under LC, when you call it negotiation, which could be site or usage. Now this negotiation could be with records or bill. So purchase discount is within my limit. So it is always with recourse. Paisa nahi hai, bank will recover from. But LC may not be there. LC means bank is taking risk on the foreign bank which has issued the LC. So it has to be without recourse. And it could be collection bill where the exporters are large enough, they will manage their own exchange risk, etc. They have their portfolio, they have their treasuries. There they prefer rupee finance, but we will see what to do. You give us only rupee finance. The tenor for I have to calculate the due date. So for side bills, I will calculate it or allow a normal transit period. Now a dollar bill drawn abroad or a euro bill drawn abroad, where the payment is to come from abroad, the normal transit period is 25 days for a side bill. Straight 25 days concessional interest will be applicable. After that, it will become overdue. But for a usage bill, 90 days usage. So the invoice says 90 days usage. What does it mean? 90 days from the date of acceptance. I do not know when it will be accepted. So bank will give you 90 days plus 25 days from A. And like that, you will get 115 days of concessional interest. Under B concept of national due date for. But many times our tenor is linked to shipment date or date of invoice. So in that case, they will give you 90 days from the date of shipment. Now, suppose 1st of January is the shipment date and 11th of January is the date when the bill is given to the bank. If it is side bill, then 11th of January plus 25. If it is a 90 days usance, so 11th of January plus 115 days. But if it is 90 days from shipment days, then 1st January to 90 days or 80 days from 11th January will be calculated. Concession interest rate applicable only till national due date or normal applicability of the NTP. After that, your overdue interest rate will be applicable. The bill is purchased. So here also that risk is there, exchange risk, and this will also be crystallized on the 30th day from due date or after. So whenever I am discounting my bill or getting my bill negotiated, I must see, if it is with recourse, that the buyer pays within a reasonable time. Otherwise, that conversion will again add to my cost. Crystallization is exchange risk comes back to the exporter. Now, what happens in the case of bills? I have got the bill purchased. Bank has charged me 20 paisa margin at that time. Then the bill was not paid by the buyer in time, and bank had to crystallize on 30th day from due date. Bank is notionally selling the dollar to me. Bank will again charge 20 paisa. And after 15 days, the bill is paid by the buyer. Now the risk is with me. Bank will again charge 20 paisa and apply the market rate. So I am exposed to the market 3 times. I am exposed to the margin 3 times. And the overdue interest also will be charged for the period from due date till 30th day. When the bill is financed in maybe foreign currency linked benchmark, so far. So it is similar to PCFC, we call it PSCFC. Same rules will apply for crystallization, etc. But the benchmark link is not rupee repo rate or treasury bill, it is SOFR. Now we will talk about 2 additional tools for export receivable finance, that is bill finance. So what I want to convey here is that pre-shipment, before shipment, there is only one tool. I have to draw from the bank and see how bank is financing me, what other loans there. But post-shipment, I have other avenues also. One is negotiation of bills under LC. I don't have a limit with any bank. So there is no question of taking finance from the bank. But I get an LC. I am manufacturing the goods at my own. Putting my own money. Or maybe my supplier is giving some credit facility to me of raw material. But when I get an LC, I can get this LC discounted or negotiated with a bank for my post-shipment finance without the limit with the bank. Or even if I have a limit with the bank, I can use this negotiation window as an additional tool to raise additional money. What will happen? The issuing bank has issued the LC and the shipment is done by the exporter. Now this is 90 days from the date of shipment. So I have a gap for 90 days. I can ask my bank, since the issuing bank has already given me a commitment that they are going to pay. So my bank will discount this LC for 90 days and give me the money upfront. 90 days की जगह maybe that acceptance come in 5, 7 days, 10 days. Now when my bank will discount this LC, when this bank is good, in their opinion. Good bank means normally we use the term first class bank, reputed bank, or there is a relationship between issuing bank and correspondent, today our bank. Then it will be possible. So we'll see how and what is to be seen here. If I find or if this bank is not acceptable or not a good bank per se, then I can get the LC confirmed with any first class bank from India. So suppose some bank ABC Cooperative Bank in Germany has issued an LC. Maybe any bank or my bank does not accept the risk on that. But ABC Cooperative Bank has a relationship here or they have an arrangement with some public sector bank here in India. And that public sector bank adds confirmation to it. What does it mean? You give the document to me, I will pay. I am not, now I will close my eye to that cooperative bank. I will only keep my eye open on this public sector bank. Or maybe some foreign bank branch. Because that ABC cooperative is maintaining dollar account, say with some foreign bank which is having a branch here in India. Then it is possible that that branch may confirm it on the basis of the relationship which they have. So confirmation is a reiteration of the credit risk for the bank which is negotiating. So this can be set up without limit. I do not have a limit, then I can do it. So this was for an additional. Low limits required by the exporter. The bills are negotiated or financed by the bank based on the lines allocated to the foreign banks which are issuing the LC or the confirming bank. The risk is on the LC issuing bank. And payment is done normally when the bank in India gets the acceptance from the foreign bank about the due date. Largely, this is linked to SOFR or alternate reference rate, the dollar funding route. But because subvention is there, now many banks are giving rupee route. This acts as an additional working capital tool for me. Either I have a limit and I can raise additional money, or if I do not have limit, then also I can raise additional. Now, some points which we have to discuss. Buyer and importer wants usage period. Seller and exporter always wants immediate payment. So letter of credit becomes a guarantee by the bank. Now, this is where my bank agrees that if it is guaranteed by a bank does not know whether the buyer will pay or not. But when the bank guarantees, then our bank is at a comfort. So buyer pays its bank LC opening after 90 days as per LC term, whereas the supplier in India will get, if documents are credit compliant, bank can negotiate and finance it. Negotiation after acceptance by the issuing bank or the customer. This is how the flow will be. Now, some points to check. Which is the LC issuing bank? It must be acceptable to our bank. Any Tom, Dick, Harry bank will not do. Our bank will say, no, we don't have a relationship, I don't know this bank. So it has to be a good bank. And if it is not a good bank, then it has to be confirmed by a bank in India. Good bank in India also. An LC issued by ABC Bank, Cooperative Bank in Germany is confirmed by XYZ Cooperative Bank in India. Maybe it is not 1 plus 1 will not become 2. But if it is confirmed by a public sector bank, large private sector bank, or a foreign bank here in India, then it will become 2. Before getting the LC established, you have to ask for the name of the bank. There is a contract which is happening. Supply will be done under LC. Immediately ask the supplier, by give the name of the bank, kiska LC khologe? And you have to go to your bank and say, sir, please tell me whether this bank is a good bank and you will finance this LC or not. Or whether you will confirm this LC or not. Both the things. Confirmation is only an additional cost of 1 to 2%. But it will save your skin. If you are able to prepare good documents which are LC compliant, then your bank will only pay it. Ask for a draft LC. There are sometimes some XYZ conditions are there which we are not able to complete. Ask for a draft LC and also take this LC to the bank. Ask somebody, sir, isko padh ke dekho, sab theek hai na? Tomorrow you will say this is not possible, that is not possible. Or some detrimental. You will find several people in the market, ex-bankers, consultants who are already doing this work of guiding exporters to read the LC and guide them about the risk on the LC. We saw an LC last month mostly, or previous to that, where there was a condition about advance payment or some red clause LC was there. And after 3 times reading that LC, the bank in India, I or the exporter were not able to make whether you are getting the money or not. I told them this should not be accepted. They went to the bank and then bank said, sir, I will only pay if the other bank pays. So, matlab kya hua? LC, I need a confirmation here. I need a commitment here that I will pay. If there is no commitment, then it is not an LC. You are only making the conditions in the LC in such a way. We had an LC from Bangladesh several years back, which said we will pay upon receipt of payment from the buyer. तो फिर बैंक का जरूरत खत्म हो गया. So I'll have to check all the conditions. It is couple of thousands only. Maybe you are spending only, you receive an order for $1 lakh and somebody charges you, professional may charge you 2,000, 5,000 rupees to guide you. It is very small cost because you are putting $1 lakh worth of goods at stake. Take help of bankers, take bank help, and maybe you have to develop the capability gradually. You will come to know. एक बार खर्च करेंगे तो पता लग जाएगा आगे क्या करना है. Understand preparation of error-free document. Now this is very important. If I am not able to prepare error-free documents, totally complying with LC requirements, comma, full stop, spelling mistake, no spelling mistake, etc., issued by dates, then only it is worth to do the business under LC. Otherwise, not. So this capability has to be developed, and then you have to ensure that this is done without recourse. Working capital. Now the issues are that awareness is not there. People do not know how to use the LC, how to maybe use the LC for financing purpose. We do not focus on LC issues. में LC आ गया, we are all glad. But क्या बैंक ने issue किया है तो देखो. We got an LC from Cyprus. Shipment was to be done in Bangladesh. The buyer was also in Bangladesh. और बांग्लादेश का buyer साइप्रस जाके LC क्यों खोल रहा है? Or it is ABC Bank, Cooperative Bank, I said. Let us see what type of bank it is. It could be a finance company using the name as bank. And thirdly, and most important, error-free document. Another tool is factoring. So I can raise money from LC. I can use money for without LC documents for factoring also. Several times it happens that I do shipments to my regular buyers abroad. Multinationals are there. Every month I have to ship $1 lakh. So I can go to the factor and set a limit there. It is an alternate route. So factoring अपने आप एक institution है. They do the financing of receivables non-LC largely. And they also help us to manage our sales ledger, debt collection, recoveries, absorption of losses with insurance, etc. In case the buyer does not. They will set the limit for us. In India, what is happening? In India, we had started factoring in 1999 and we then had a law, Factoring Act of 2011. And several of the factoring companies are there now, both in the DTA, in the domestic area, as well as in GIFT City. So we have Drip Capital, India Factors, India Exim Factors, etc. India Exim Factors is a subsidiary of Exim Bank. Then State Bank, SBI Global is also there. All those factoring companies. What do? They will finance. So what I will do, I will supply my goods to the debtor, give the documents to my factor. Factor will get this accepted. They have already set a limit, $1 million on this debtor. And once the confirmation is there that they have received the goods and the documents, the factor will discount and pay upfront after deducting certain margin. And when the debtor pays, they will recover that 80% money, and 20% will be recovered or will be paid to the supplier after they receive full money from the debtor. Now, if there is an insurance, I get 80% upfront, then nothing, but at least my 80% is insured. They do the debt administration. How? They will set a limit for each of the buyer. This buyer is good with worth $2 lakh, this buyer is worth $5 lakh, this buyer is worth $1 lakh. So I will know इस पे कितना exposure लेगा. Debt administration and credit control. Then they will do the follow-up. Due date के पहले, due date के बाद में. They will send the reminders to the buyer. Why your bill is due on 30th of June. 29th को एक भेजेंगे. Tomorrow I must get this $10,000 of the bill value. अगर 30 को नहीं आया तो सुबह एक बार और भेजेंगे. And then they will follow up every day. Ideally, they will keep a margin when they finance. So they will not 100% finance. They will finance 90% to 85 or 75%. And balance amount will be paid when the buyer pays the full amount. The ideal cost nowadays comes to around 10%, 11%. But the good part is that in India, now that subvention scheme has been extended to factoring. So I get a rebate of 2.5% when I can get that money back from the government. We will see how last slides are the fourth slide. Factoring could be with record or without. If I get an insurance or if I opt for an insured discounting, then it is without record. But if without insurance, then what happens? If the buyer defaults, the factoring company will ask and come back and ask for the money back. The factor will do the assessment of the exporter. They will also do the assessment of the importer. They will ask and tell you, for the name of 2, 3, 4 major buyers. And on that, they will give the limits. Financing of exporters bill drawn on the importer and the follow-up, etc. is done by the factory company. So this is the two additional tools where you can draw or you can get the money on the post-shipment side. I will just touch upon a couple of recent updates. On the credit side, RBI on 14th November 25 announced some trade relief measures where they said that banks may allow enhanced credit period up to 450 days. Earlier we saw it is 360 only for pre-shipment and post-shipment credit disbursed till 31st March 26. One was this extension allowed, but it is again now 360 only. Also, they said that wherever packing rate was allowed before 31st of August 25 and shipment could not take place because of the global issues, then even by sale of those goods domestically, this can be adjusted. So the view is that no penal interest should be charged even in such cases. The next was 19 January 25, when under the Export Promotion Mission Niryat Protsahan, interest subvention was announced. Interest subvention on pre and post shipment finance as per the DGFT notification of 2nd January and 16th January, certain clarifications are there. What does it say? Subvention of 2.75% interest will be given to MSME exporters only, both manufacturer and merchant. For what commodities? Under HSN 6-digit tariff lines. So entire world is not there. Entire bouquet of commodity is not there. There is a list of HSN 6-digit code which is attached to that particular circular. For only if you are involved in the export of that or manufacturer of that, then you will get the subvention of 2.5. So suppose my rate of interest is 9.25 today, export finance rate, and I am eligible MSME under that HSN code, my interest rate will come down by 2.75%. So if I am drawing the amount from the bank will reduce that 2.57 and apply it. So what banks are doing? Bank is applying at the end of the month 9.25% and then reducing 2.5% accordingly at the end of the month. 20th February 26, again RBI or DGFT issued a notification under the Niryat Protsahan that they said that alternate routes of financing we want to promote. So they extended this interest subvention to export factoring, both recourse and non-recourse, whether in rupee or in foreign currency, for those entities which are onshore and approved by the RBI or they are in GIFT City approved by IFSC. Same way it was done. So relief boost or no, this means that if I am taking finance from the bank, I will get 2.75%. If I am drawing or post-shipment finance or a factoring from a factoring company, maybe DRIP or India Factors or India Exit Factors, etc., or maybe for that matter SBI Factors, then I will get this benefit of 2.7. Now, what I understand here is that in case of factoring, the claim of 2.75% is to be made by the exporter. It is not automatic. Till maybe 2 days back, it is not very much clear that who is going to claim it. So it is largely that it is to be claimed by the exporter. In case of bank finance, bank will deduct it because it is to be claimed by the bank. Lastly, there were relief boosts for export confidence. That relief was announced because of this Hormuz related issue, US, Iran, Israel, etc. What does it say? Geopolitical condition and West Asia crisis. ECGC was nominated as nodal agency, where if your consignments have been sent to UAE, Saudi Arabia, Kuwait, Israel, Qatar, Oman, Iraq, Iran, and Yemen, three windows were open: track 1, track 2, track 3. Why I have brought this here? Because exporters may not be knowing and they are missing out on some facility which government is given. If you have an ECGC cover, either taken from the bank or either taken directly from ECGC, and if you have made shipment between 14th February and 15th March to any of these countries and then the money has not come, the shipment has been lost in transit, or kuch pada raha, kharab ho gaya, anything, then whatever the ECGC cover is there, maybe sometimes 75%, sometimes 80%, 85%, the government says we will cover up to 100%. The difference of that gap we will bridge. So you will get the money in full from ECGC. 85% under the policy, 15% under this RBI, the Government of India guideline. The second track says those who are planning shipments from 16th March to 15th June. But because of this problem, and you do not have a policy, so to encourage more people to take policy, and I'm not sure why people don't take credit risk policy when you are supplying goods to anybody. We are not having a control on the buyer or buyer's country. Always suggesting to take policy, it is an additional cost to you, but better you are working risk-free. So those who had not taken, they wanted to promote that you should take ECG cover, and those where shipments have been done between 16th March to 15th June, it was meant that coverage will be given up to 95%. So ideally what happens? If you have a post-shipment cover through the banking system, your coverage is what? 75% ideally. 25% still the risk is with the exporter and the bank. So 95% cover is given. The third one is that those who have not got a policy today, tomorrow, yesterday, etc. And because of this Hormuz or West Asia crisis, your freight and insurance have increased. So government has said that whatever is the increase, maybe you can take a shipment, sometime you have done in December, and then sometime you have done in the month of March. The freight cost has doubled, the insurance cost has doubled. So the difference, whatever is increased, of that 50% will be reimbursed by the government up to 50 lakhs per export. So suppose my freight was $1,000 per container in December, and in March I have paid $2,000 per container. So the difference is $1,000 increase. Out of that $1,000, the government is going to reimburse 50% of that $1,000 up to 50 lakhs per exporter. But the catch here is that this budget was announced for some 470 crores or so. So if you have to stand in queue, maybe if it is exhausted, then government may allow more. If no more, not more, but you have to file all these things in the ECG website. I will run this last segment on cost reduction. Now, everywhere I have tightness. My cost of raw material increases, my cost of freight increases, my maybe currency is so volatile, I do not know I will get 96 or 95 or 94. That will all impact my bottom line, margins. So I should always focus on cutting cost everywhere, including the cost of finance. Do not use CCOD for export related funding. If you are doing an export, sit with your banker, tell them that I am doing export or I am planning to export. Within the total, somebody has got a limit of 50 lakhs. आप स्टार्ट करना चाहते हैं, बैंक को बोलिए 10 लाख रुपए की एक्सपोर्ट फाइनेंस की लिमिट कार्व आउट कर दे. Within that only, bank is not going to give you extra. What is the difference? If you get an order and if you take export credit, you will pay 9.25 instead of 11.25. Then get export limit sanctioned within the overall limits. Endeavor to provide interest benefits and subvention to your sub-supplier. One exporter forgot to take subvention. After 2 years, they came to know it was very difficult. Some 5 years back, we handled a case in UP. Very difficult to convince the bank, very difficult to convince RBI, sir, गलती से नहीं लिया है, बनता है दे दो. और इंटरेस्ट सबवेंशन का स्कीम चल रहा था. अगर बंद हो गया था तो शायद नहीं मिलता. Previous 3 years back. Then arrangement with bank, provide necessary documentary and support. So for your sub-supplier, if you reduce the cost, you will benefit. See that you are getting the proper equalization benefits. Review pricing, dollar versus rupee every time. Now, suppose you are getting subvention, then it is okay. But suppose you are not getting subvention, then that 2.75 is not yours. So you have to compare 9.25 or 6.25. I have an example here. Benchmark rate plus margin for 180 days. Repo rate is 5.25. So suppose I will take it 5.5 plus 300 basis points, so 8.25 or 8.75 will be the rate. Overdue will get me 2% additional. Penalty will be 4%. If it is used as domestic, then I may be paying 2% additional also. Equalization is 2.75% as per specified HS code, whether I am getting that or not. If it is in foreign currency financing, then SOFR plus 3% or 3.5% will be there. So for 3 months, the rate of interest could be 6.25 or 6.75. For 6 months, it could be 7 or 7.5. But I am not getting subvention here. So if I am not getting subvention, then I have to compare 6.75% for 90 days versus 8.25%, because subvention to hai nahi na. I have to compare this, whether I am getting a benefit of forward contract, exchange rate, etc. So this is all from my side. My details are there. I have two things to say. What is interest cost saving? What is exchange rate benefits? It is the creation of your wealth. It is adding to your backline. So start learning or keep learning, because that learning is beginning of your wealth. And happy exporting, because the country needs export. So I will also post my details in the chat box. If you have anything relating to banking or any other aspects on finance, etc., you can always touch base with me. We can support the exporters on various irregularities that have been created, including pending. Thank you. Thank you all, and best wishes. Thank you again, ICICI and
Thank you, Gaurang ji. We will proceed with one small presentation from Malini Swami from ICICI Bank, and then afterwards we will take some questions. There are some questions which are in chat box. Please go through it. Now I invite Malini to talk on ICICI Bank products, a small PPT. Malini, please come. Malini, are you there? Malini है? नहीं. Gaurang ji, Malini है? Is she there? I don't think so. Okay, sir. Then we will proceed for a question and answer session, sir. I think he is talking with her.
रेस किया है ना.
Yeah, Gaurang ji, can we take Q&A?
Yes, sir. Yes, sir. I'll just open that.
Please go to the chat box first, and then we can ask.
We'll take the questions from chat and then.
Yeah.
Gaurang sir, sorry, I wasn't
able to. Oh.
Gaurang sir, this is Malini.
Yes, please. Yes, ma'am.
Yes.
Sir, Malini has joined, so let her.
Okay, Malini, then we will present the presentation from here, and then you can talk. Rakesh, can you just please start?
Yes, sir.
Yeah.
Sorry, I was already there, but I think I didn't have the rights to unmute myself.
Okay. Now, is the slides visible?
Yes, it is. Thank you.
Yeah.
Okay. Good evening, all of you. Thank you for giving us this opportunity. ICICI Bank here is there to present details about the trade solutions which we have for our importers and exporters. So a lot of times we see our importers, exporters specifically struggling for their remittances, about which branch to visit, which branch is going to be able to help them with their regulatory pendencies, or which branch is going to be able to assist them with the regulatory guidelines, or from where will they get their SWIFT charges. So these kind of daily challenges which is faced, for this we have a one-stop solution through ICICI Bank digital platform. So you can go to the next slide, please. So for all your banking requirements, taking into consideration that your time is extremely critical, we have the Trade Online portal, which is specifically designed as per the requirements of the exporters and importers. So what can you expect from the Trade Online portal? One is it's a one-stop solution Okay, it gives you the details of all your transactions, all your inward remittances can be settled. You can do your outward remittances through the trade online platform. You can also do your conversion from the EFC to the current account. And there are also requests like your LCs and BGs, which can be done within a predefined tag. Like for bank guarantees, we can give you a bank guarantee within 3 hours. In addition to this, for your capital transactions where you would require some kind of advisory services from the bank, this can also be provided. We also assist the customers for filling up the forms on the firm's portal to make sure that any of their regulatory compliances would be done within the prescribed time limit. In addition to this, beyond your banking solutions, we also have certain innovative products which we will discuss in the next slide. One is Insta Export Packing Credit Facility, which can be availed to our existing customers. We also have a Trade Emerge facility, which gives the Trade Emerge, which is a part of our trade online platform for our new customers, which should be very essential for our very beneficial rather for the new importers and exporters, as it will help you to get information about how to get started in the imports exports, and also it will get you to connect with the overseas parties, suppliers and buyers across the world through which can be connected through the trade emerge. You can go to the next slide, please. So like I said, sir, trade online is, it has been designed taking into consideration that the importers and exporters may need to contact the bank at any point of time. So trade online is available around the clock. There is no additional setup cost. It is a part of our corporate internet banking. So through this, you can get your trade online activated. You can do your export bills, lodgement, realization, collection bills. On the import side, you can do your service payment, outward remittances, your letter of credit and bank guarantees. Like I said, no additional cost. It's all a paperless transaction. There is a quick turnaround time for all these transactions. Okay, and in addition to this, in a future, whenever you require any documents, all this would also already be available in the trade online portal. So you will have an audit trail of all your documents. You can go to the next slide, please. Some more unique features which I would like to speak about. One is, if you are making payments to your same supplier, you can use you can save the template of the overseas party, and that can be used as a pre-filled template whenever you're making transactions. Second is, you can also you can schedule your payment basis the due dates. Okay, that is a facility which is available through trade online. Of course, compliance being an important part, bill regularization, this can be done through trade online. Also, we have a feature where in case you want to give only viewing access to your accounts team in a partnership or private limited, that is available, where your team can only do the compliance part. So they will be able to raise requests for shipping bill regularization and bill of entries. They would not have access to the account. We have a single one view dashboard. This is one of the unique features where in one single screen, you will be able to view all the transactions which are pending, all the due dates. You can click and you can understand what are the due dates of your bank guarantees, your LC, and this is available in a one view screen dashboard. We also provide customized alerts. So in addition to alerts which is being provided to the main person as required by the company, you also can opt for 5 more email alerts or mobile alerts. The same can be customized and sent to 5 different people as per the customer's request. Okay. ICICI Bank was the first to introduce the InstaBiz, which is the mobile application of the trade online. This is again a very unique feature for my importers and exporters, where the owners also would want to approve the transaction. So you can do it on the go. You can do it through your iMobile. So you can settle your inward remittances. You can book deals through our FX online platform. In addition to this, you also have, like, suppose if your accounts team needs help on how to initiate transactions, we have a virtual guidance where they would be given assistance for step-by-step process on how to initiate transactions. We also have a facility of a master vault where you can save your important documents, like maybe your IC, your LOA, or the LEI. All these documents can be saved in the master vault. So it is easier to just use them from the master vault. Okay, and like I said, we have a predefined tag for all these transactions. So if you're doing a conversion from your EFC account to your current account, that is done almost instantly. Can go to the next slide, please. So like I explained, sir, this is the trade one view dashboard. If you can see, this is a one screen which will give you details about all the transactions which are pending, all your compliance pendencies, and all the due dates. You can, so wherever you want to find out the due dates of your bank guarantees, LCs, your payments, everything is there in this one screen. You can click on that and it will take you to the appropriate screen. So this is a one screen dashboard. In this, you can also download your SWIFT advices, your debit advices. In addition to this, you can monitor your due dates and your outstanding. Also, if there are transactions pending at the authorization level, transaction pending at the bank, all this will be visible from this one view dashboard. You can go to the next slide, please. So one of the innovative products that we have brought about is the Insta EPC facility. This facility can be availed by those customers who have a running order, Insta EPC, running order, export order facility with the bank. And in order to avail this through the trade online, there should be no order which is pending for more than 30 days. And there's also a requirement that the LEI should be updated if the transaction value is more than 7.3 crores. So this can be digitally availed by our exporter through the trade online. Go to the next slide, please. So bank guarantee becomes a critical requirement because it's extremely time bound. So this would be beneficial to all our customers because we would be able to give you the bank guarantee within 3 hours if there is no legal clause, no onerous clause. So the customer can raise the request to trade online and he can ask it for to be collected from the designated branch. So again, like I said, it is paperless. It is just a one-time visit. It's a simplified documentation. To help our customers, we also have a BG text library. So in case the customers do not have a BG text of their own and need some assistance, they can use this library for the BG text. And this can be availed against a FD or a collateral. Go to the next slide. So like I said, trade emerge is something that we came up with, especially for our budding importers and exporters. So when you initially start your import-export business, you would have a lot of you would need guidance about what is the requirement to start your import-export business. You would need to know about the regulatory guidelines. So you can use this trade emerge facility through which you can understand what are the licenses required. Automatically, it will take you to those particular websites where you need to apply for these licenses. One additional feature which we have added is you can access the customers across the world, your buyers and suppliers. This will give you connect to at least this would give you connect to more than 15 million customers where you can access them. And in case you require the DNB reports or the credit reports of the overseas party, ICICI Bank would be able to help. And we would be providing an additional discount for our bank customers when they are asking for the credit reports of the overseas party. You can also search for your logistics partner through the Trade Emerge facility. And we also have the tie-up with ICICI Lombard. So all your insurance requirements, this would be a time saver for you. And there's a knowledge hub, of course, which will give you details about all the regulatory guidelines pertaining to imports and exports. So do make use of this feature. So these are the unique benefits of trade online. Thank you for your time. And please do let us know if you need any information about ICICI Bank products. ICICI Bank would be happy to help you with your banking requirements. Thank you, sir.
Thank you, Malini. Now, Gaurang ji, we can take questions from chat box first, and then we will request member exporters to unmute themselves and they can ask the questions. Yeah.
So in the chat box, the first question is, please explain what, with an example, if I had taken disbursement of 1 crore for 60 days and not able to pay and wish to pay from own fund. So if you have taken a packing credit loan and suppose you are not now doing the shipment because of any XYZ reasons and you want to repay it from your own sources, then it will be treated from day one as a domestic advance, which penalty. So I gave you an example that if your export finance rate is say 9.75% and you are eligible for subvention, so 2.75 goes there. So your net rate is 7%. Now again 7% what you are paying. 9.75 is your export finance rate, your CC rate could be 11.75, then your 2 plus 4, 6% penalty, somewhere the penalty is 4, somewhere it is 6. So that 11.75 plus 6% will become 17.75. So if you pay from local funds, you have to pay against 7%, you have to pay 17.75%. That is the difference you have to pay. and it will also put a block in your thought in your credit profile that you have taken money for export, but you have not done the exports. So that again, there is again question that subsequently when the bank reviews the account, they will say, sir, in a year 4 times you have done this. You are taken for export but not done the exports, and you are now paying from local funds. We will not give you running account facility because that tag of good account, good maintenance, etc. will go out of that account. So this you will have to take care of that. Besides the cost. So I hope this is clear.
Yeah.
His
Now,
second question is now RBI, sorry.
Yeah, the second question is from Jasti.
Yes, please.
Yeah.
So now RBI has given extension of time on packing rate post-shipment finance due to war situations. Is this to have bank's internal policy or based on RBI circular it has to be approved? Now RBI has given a broader framework that this can be allowed up to 31st of March, up to 450 days. So banks within their own system, they will have to frame their own policy and then allow. Now, when you approach the bank will say that we'll have to amend your sanction also. So once the bank has to amend, that bank cannot say that we will not do it. But they will have to assess the things and they will assess whether you require up to 450 days or not. Just like that, because they may restrict also. Now, suppose today you go, they will say up to 360 only. So normal situation is 360 only. They may not agree. On the first instance, they will not say 450. They will say, okay, you take an extension for 90 days. 180 days, first initially 90, then 180, then 270, then 360, then further 90 days. It is not going to be given that from day one you can enjoy the funds for 450 days without doing any production or without any shipment schedule, etc., etc. So this is one. But bank will approve based on your request and their senses or they're working that whether you require for 450 days or not.
Wow.
Manufacturer suppliers the goods to a merchant or a trader exporter, but the merchant wants to draw PCFC or EPC on the supplies with the NOC from the trader. There is no requirement to draw an NOC from the trader. If you are buying cash from trader, bank will give you like that only. It is the other way around. If the manufacturer wants and the trader, maybe trader has to give an NOC, then it is permitted within the guidelines. Each bank will have a policy where they will allow sub-supplier also. So your sub-supplier, that is the manufacturer, will have to get the limit sanction or pre-shipment finance. Unfortunately, PCFC will not be given to him because he is not the direct recipient of foreign exchange. PCFC he is not allowed. He is only allowed for rupee packing credit and subvention related. But the NOC from merchant exporter will have to be taken by that. Please provide valid RBI circular. So that RBI circular of 28/11/25 on the total gamut of finance in the country now, single circular is there. That will contain everything, and you can also talk to your banker in this regard. If you find any difficulty, then you can maybe get in touch with me. I've shared my details there.
Sir, can I speak to you?
Yes, please. Yes, please.
Thank you for giving the information. Before going to this point, first you are told regarding the extension of the or closure of the packing credit. Suppose the 60 days somebody has taken and they are going to cancel and repay from the rupee packing credit.
Yes, sir.
From their current account or whatever CC. So what is the rate of interest you are told, sir? Can you confirm again?
The rate of interest is what? Your export finance is slightly lower than your cash credit limit, normal cash credit limit. Suppose I was to give you cash credit, say at 11%, your export finance rate could be 10 or 9, something like that.
Right, sir.
So when you are taking out the tag as an export credit, it will be treated as a domestic finance.
Right.
So instead of 9, you are now eligible for 11 only because the funds have been used here or there. Now there is a default. Somewhere the default interest as per your sanction could be 4%, somewhere it could be 5%, somewhere it could be 6% in total. So on 11% that is added.
So it's a big surprise, sir.
Then you pay a higher interest rate of 16-17%.
Oh, it is a big surprise to me, sir. It is never seen any such things. If any default is there, they will convert it from the day one as a current account, that cash credit rate. But I didn't see any such kind of.
So maybe different banks will apply different rules on default, sir. It is not uniform. That is what I said. It will depend on bank to bank.
How the bank can take it? Once it is a default, you are going to charge from the day one with a cash credit rate. Where can it be additional 5%?
The default interest rates are charged. No, banks are charging. We have seen the sanctions of the people. I have seen sanction of the people where default interest rates are already mentioned there.
It cannot be, even if it is there now, any delay or default, it can be hardly any 2% penal interest.
Not I am disputing 2% or 1%. This is only my example.
But you are talking
I
of
am not the bank.
17%. It was really shocking.
No, I am not the bank. It is only an example. I am not the bank. I am not the sanctioning authority. I am only an example trying to explain that this could happen because we have seen the sanctions in this manner. Now, how and why I will not be able to tell you how this is taken or why this is taken.
Because it is scary that way when it is told.
There are 100 authorized dealer banks in India, sir. And there are 100 policies banks will follow. So I am not telling you this is ICICI's policy or this is SBI's policy or this is bank. I am an external speaker. I am not from ICICI. Okay. So I think this confusion is there. I am not from any bank. I am just telling what sanctions could be, and you have to take care that what your sanction is there. Somebody enjoying a 100 crore limit may be having a penalty of 1% only. Somebody having a 10 lakh limit may have a penalty of 2% or 5%. You have a different parameters, different banks charging different rates now. Banks are free to charge whatever they want to do. So there is no dispute on what and how much and why this should be taken. Okay, sir.
Gaurangji, I was also in that impression that the banks will charge 17% or 18%. So I mean, I was not aware it is the example. So thank you, Jatinji, you clarified it. Thanks a lot.
It is a may because there are sanctions which we have seen in some banks. Some banks they will charge only CC plus 2. Somewhere they will charge, no, it is not, because you are not used as a CC and we did not have a charge, then they will charge extra also because there is a, what you call, the covenants which the banks has prescribed for packing credit, it's a violation of that. So, but for violation, they will charge additional 2%. So, different banks may have their different nomenclature here.
So, there is no uniform rule from RBI?
No. For penalty, there is no uniform rule. It is not like that. Okay.
So now, with regard to my second point, now
yes,
I am a manufacturer. I don't have an export order directly. I am going to export through a merchant exporter.
Okay.
I want to drop EC because to get a lower rate of interest for as I am supplying for exporter, export purpose. So in such case, what is the circular? Actually, the old circular is now not appearing in the RBI website. Can I have it? Because we have tried with the bankers, they are not able to say we have to support to them with the valid circular.
So you have to talk to your bank that I will be a sub-supplier. Please find out from your...
I'm just telling you, we had enough of discussions, but they are asking us to show the provisions.
Sir, then you have to come to me on one-to-one, then we will discuss.
I will come to you, sir. Don't worry, sir. Thank you very much.
You have to come to me because we will not discuss the name of the bank here. So better that you come one-to-one. I will also like to talk to that
and
bank.
I'll do that. Thank you for the service.
On behalf of TEXPROCIL, I'll talk to that bank also if they say that you bring the circular. Okay, sir. So next question is from Mr. Ramchandran. If we discount our export bills with an allocated payment term open account, do we really need to surrender export incentives for the interest part deducted? Kindly clarify. Interest part deducted abroad. I hope you are asking that if your bill is discounted abroad and you receive less payment after deduction of interest. No, sir, it is a cost to be deducted. In my view, it is not a discount allowed. It is the cost of financing which is there. Now, cost of financing should not be treated for reduction of interest export subvention. Maybe you have to discuss with your bank, and if it is still not clarified, we can again engage and see the structure that how your actual transaction flows and what bank is treating to it. Maybe I am not an expert on DGFT related guidelines, so will not have a better clarity on what incentives required to be surrendered, etc. Mr. Krishnamohan Reddy, I am an exporter. I can take LC route or factoring route either to get finance immediately on exports, considering documentation issues and compliance issue in EDPMS. Sir, EDPMS is a totally different ball game. If you are getting payment upfront by discounting or even factoring, and your EDPMS entry is lastly closed when the final payment is there. Till the final payment, the EDPMS is partially closed. It is treated as a financed bill only, whether you do it as under an LC finance or under a factoring finance. Even the closure of the entry in EDPMS should ideally be done as a financed bill, not as a finally paid bill. Finally paid will be at the end when you don't get that 20% or you get that 20%. Banks may adopt different methodologies to handle the bill, do the accounting and close the EDPMS. That is again a challenge that banks may adopt may have different understanding and different maybe nomenclature to handle the bills in a manner this way or that way. So those questions are there.
I think there are two people who have raised.
Sir, Justice sir, I am so sorry. You'll have to talk to me, or I'll have to call you and speak to you about your specific requirement, and then we go there from there.
Rakesh, can you just check who has raised their hands?
Yes, sir.
Any questions?
Yeah,
Participants, please unmute yourself.
This is Salil Chawla. Very good afternoon. Thanks for giving the opportunity. I am Director DFU Publications. It's a media company. Sir, first and foremost, very exhaustive, very nuanced, very detailed, Around you have been speaking since last around 75-80 minutes, My salute to your spirit and patience. Since my question lies in my statement only that it was a very nuanced and comprehensive can I therefore humbly request you that quickly you can summarize as a short message that how can today's webinar on export finance strengthen textile exporters, access to pre-shipment and post-shipment credit, improve working capital flow and enhance competitiveness in global markets while easing liquidity pressure, supporting timely production and enabling smoother execution of international orders in an increasingly demanding trade environment. Sorry for asking a tough question, sir. Thank you.
To be summarize what we have talked about in that 70-80 minutes, every business will require more funds, more funds, more funds, more funds, more funds. Whether it is a 5 crore company, 5 lakh company, 500 crore company, 5,000 crore. Everybody wants to grow. Your capital will not be sufficient, so you have to look around what all facilities are there. And today's session basically leads us to see that how we can avail banking related finance, and if I am availing export finance, then what smaller things to take care relating to due date, relating to interest rate, relating to the facilities which government has given under subvention for growth of exports and for meeting my working capital requirement both on pre-shipment side and post-shipment side. Also, additionally, what additional tools are available? Like if I am able to get an LC from the buyer, how should I use the LC? We have a different session on LC altogether where we handle only LC related nitty-gritties and conditions. But how to use an LC and whether I can get the funds under an LC on the post-shipment side, and the new baby on the block. The factoring is not too old in this country, a couple of years only now, and with couple of new units coming in Gift City, I think it's going to grow. A good part on the side of the government that they have also allowed subvention on factoring. So maybe an additional tool will be available to exporters to raise finance and bridge their working capital.
Thank you so much for the summary, sir. Many thanks.
Yeah. Mr. Ranaghat, please unmute. Mr. Ranaghat.
Sir, I have a question to the Gaurang sir. In pre-shipment finance, an exporter received packing credit but fails to ship good within the stipulated period. What actions should be the bank take according to RBI guideline? And my second question is, post-shipment finance, how does delay realization of export process affect the exporter credits rating and borrowing capacity?
So, sir, if you avail packing credit and no shipment takes place, so maybe one is that you can, if your order gets extended or your period gets extended, you can always get it extended. So maybe from 90 days you have taken, now the shipment is delayed, you get an extension for 30 days, 60 days. It has to be within the sanctioned limit. So that is one thing. But ultimately, if you do not ship, you do not extend, then it will become overdue. And banks are not allowed to keep overdues more than 90 days from the due date. So your account itself will become an NPA. It is not in one packing credit getting NPA, your account will get NPA. And NPA nobody. So that forced recovery process will start if you do not repay or if you do not extend or if you do not, there is no communication with the bank. Then bank will enforce their rights to recover that money in whatever manner it is there. So it's all entire recovery process will start. But the ideal thing is that if it's a running account, if it is an account that you are continuing to do the business, if it is overdue, then get it extended. If you are not able to do the shipment, then ask the bank whether can I repay this so that your cycle or rollover starts or keeps on going. Otherwise, that rollover will stop and there will be no dialogue with the bank. The other thing is that if your post-shipment gets overdue, and your buyer does not pay in time, then also cancellation happens in 30 days. Then also 90 days rule will apply. Recovery from local funds will apply because that one bill overdue will lead to entire account getting NPA, and that bank will not want, and even you will not want, because once you get an NPA, a lot of other problems will come into the picture. So try to see that within the crystallization period or within that 90 days period, we are able to adjust it either domestically or from other sources. And then our account continues to go like that.
Okay, thank you, sir.
Yeah. Any questions, anybody? I think if there are no questions.
Sir,
yeah.
can I ask one more question?
Yeah, Jasti ji,
Always.
please come.
Sir, this may be useful for others also. Okay, just I'm asking. We have drawn packing credit. Okay, with the any under running account, we are not able to fulfill. Okay, we have to pay back. But at the same time, there was a RBI circular says that you can repay from the out of the current account balances against maybe a previous exports or whatever it is there. Can you clarify in that more so that everybody will, the public may be known on this.
Good point, sir.
Instead of going for the repayment of 17% of that issue, can you guide them?
So sir, some very good questions, sir, and I have taken this in one of my slides earlier about that repayment from EFC or other account subject to mutual agreement. What does the circular say? Circular says that if you are regularly into exports, and it may happen that you are getting regularly some amounts which are lying in your EFC account or which you are having in your current account, but all of a sudden it is pointed out that your packing credit is getting overdue, and you don't want to take it to an overdue bucket. So you can ask your bank, sir, this money, the color is only exports. It is converted 3 days back or it is put into the account 3 days back. This money, you use it. We forward to use this for liquidation of packing credit earlier, but we want to do it now. On one-to-one case basis, bank should agree and allow you to take the money from current account or EFC account and adjust your packing credit, which may be overdue or which is going to go overdue tomorrow. So this is possible, but the word used is here subject to mutual agreement. Means you have to request each time and bank has to agree every time. This is not a general sanction condition that every time I go and ask the bank, then bank will say, sir, aap hamesha aisa karte ho, we will not allow. So that working way be affected. So if you have some funds in your current account, which was earlier converted or which was earlier received from export proceeds or in your EFC account, this can be used to liquidate the packing credit with the mutual consent between the exporter and the bank.
Thank you. But is there any time limit of that period of inward or any credit, any such 3 months, 6 months, or any particular 1 month, any particular time frame is not there?
No time frame is not there. Time frame is not there, but I am afraid the money will remain only for 3 to 5, 7 days only. It will not remain for 3 months. Nobody's account will have money for 3 months. which is not utilized ideally. But अगर ऐसा है कि आपके अकाउंट में 5 लाख 50 लाख रुपया पड़ा था जो 3 महीने पहले आया था, you have not used it, now you want to adjust it, तो बैंक में agree, बैंक में not agree also.
Okay, in some cases it can be okay, as you said, maybe right. It is a mutual.
Yeah.
Thank you, sir.
Thank you, sir. Thank you.
Yeah, one last question from Mr. Ramchandran. It's in chat box. Can you just read?
I'll just see.
Yes. Our export LC has a clause discount is available with LC issuing bank, which is a USA bank, but I want to discount it my AD bank, India. Is it possible?
One second. New and small exporter would be scary when it is too. Our export LC has a clause discount is available with LC issuing bank, which is a USA bank, but I want to discount it with my AD bank in India. Is it possible? Sir, available with LC issuing bank does not restrict negotiation of LC by any other bank. It is up to your bank to consider whether they want to discount an LC which is restricted to other bank. They may negotiate the LC because that LC issuing bank availability means that they are committed to pay only when the due date is there. So once they get a due date confirmation, then they can negotiate this LC in India also.
Sir, can I interfere in this matter if you don't mind?
Bolo, sir.
In such cases, it is always advisable to go for the LC, whoever opened the LC, discounting with them. Moreover, the rate of interest also we have to see, and it is not going to fall within our regular limits. So it will be outside of the limits, so that it is always advisable and guaranteed money. I have seen in the many cases. Anyway, that is their wish, whether to take or not. This is mostly it is acceptable.
Okay, sir.
Yeah. How to claim interest subvention for the funds claim under export factoring with DRIP or any other factor?
Sir, I am still trying to figure out with a couple of factoring agencies that what are the procedural aspects, because still they have not rolled out any of the procedural aspect. I am also in touch with one of the companies in Gift City and in DT also. I am not sure if they have rolled out any procedural aspect about the subvention or availability of the subvention. Once they roll out, maybe subsequently we can advise the exporters accordingly. So not yet sure how this is to be done, what type of certification will be required from the factoring company, and how the exporter will be able to draw from your bank. If you have already done some transaction with a factoring company, ideally you have to go back to them and ask them that how this is to be claimed, or whether they have already deducted, whether they are doing it or not.
I think before we conclude, I just wanted to show two slides. Rakesh, can you please on the slides? Yeah, make a slides. So members, this is a webinar series for July month. I request all of you to please block your calendar. We have a session on financing opportunities for MSME exporters on 8th of July. Followed by how to export textiles through India Post, which is a very, very important session for the textile exporters. And a third session would be understanding of custom audit provisions on 30th of July 2026. We are going to issue detailed circular on these topics and the registration links also. So I request all of you to please block your calendar and join this session. Next. Our first batch of ACPIT Advanced Certification Program in International Trade is already full. We have some 50 registrations here. So we have opened the admissions for second batch. So I request all of you to please register your interest for this course. This is a 8-module course which is about import and export, which is useful for your business. So I request all of you to please join for this course and benefit from it. And with this, we would like to conclude the session. Thank you so much, Gaurang ji, for the wonderful presentation. Jasti ji, thanks a lot for your valuable input. We will get in touch with you separately for these bank-related queries. Thank you, participants, for attending the session. And thanks a lot, Gaurang ji. Thanks. Thank you.
Thank you, sir.
Thank you,
Thank you
ICICI
all.
Bank.
Thank
Thank
you,
you,
Thank you
Malini, for wonderful presentation. Thanks a lot.
Thank you, sir. Thank you.
Thank you. Yeah.